risk reward. And we'll look at some actual numbers on that. But there's a long answer to a short question. As long as the market doesn't close above this resistance area, it's still valid resistance. Okay, here we have a series of upper shadows. Okay, and I circled in blue a series of upper shadows to show, gasp, it doesn't always work. This is the real world. It's not going to be 100%. There's a wonderful Japanese proverb. You may have heard me say it before. It's just so great. The Japanese say even monkeys fall from trees. Okay, nothing is 100%, not even the candles. Here the upper shadows worked fine in the red, and the blue it didn't work. And that's why we always have to talk about stops. And when we talk about money management, we will talk about stops. Yes?
At that point, at the blue circle, where your shadows did not work, could you have used the breakout as a continuation of the long trend?
Okay, the question is, the blue circle here where the shadows did not work, could you use the breakout as a continuation? So what she's saying is the breakout here as a continuation. Normally, I would say yes, and actually, let's look at this here. Then the question you have to ask yourself, is this enough of a breakout? Okay, I would probably say no. All right? I would like to see more of a breakout than that. But normally, if it does close above it decisively, maybe 20 pips or something, depending on the market, I would then say it was a bullish breakout. Now, I had mentioned before that single shadows aren't normally important. The exception is the hammer, which we'll look at now, and the shooting star. And the hammer is a bottom reversal signal. And this is the same in Forex and non-Forex. And these are your criteria. The hammer and the next one we'll be looking at, the bearish counterpart, the shooting star, are called one-sided candles, one-sided shadows, because the shadows appears on one side of the real body. So the hammer is a very long lower shadow candle. The real body could be black or white. The main thing is we want that lower shadow at least twice or 3 times longer than the real body. We visually want to see the market rejecting lower levels. The Japanese say the market's trying to hammer out a base. The actual Japanese word, and I don't speak Japanese. I wish I did. I could have saved a lot of money. I paid all the translations. I mean, before I did the book, I laid out all the money myself for the translations. I had no idea that the candles would become so popular. It was working so well for me when I was doing the trade recommendations. I figured, what the heck, even if I was the only one to use it. But the actual Japanese word is takuri, T-A-K-U-R-I. And I'm sure I'm pronouncing it wrong. But my translator told me that it means that you're in a river and that you're feeling for where the mud is. You're trying to grope for the bottom. That's a great analogy. The Japanese are so wonderful with their metaphors and their analogy. And that's what we're trying to do, grope for see where the bottom, where the low of the market is. So this is a hammer. And by the way, it can have a little bit of an upper shadow. Whoops. And if you want a kind of a definition, it would be 10% of the lower shadow. And the reason I can give you some of these specifics is because I have some candlestick recognition software. And it'll be out probably in the next month or so. By the time the DVD's out, it'll be out. But it's really neat. It's the only. How many of you have candlestick recognition on your computer? None of them have my input. I bet you they even forget about the trend. I bet they call a bearish engulfing pattern if it comes after. Or we'll look at this later. They don't talk about trend. I'm going to have software that's going to have candlestick recognition, and it's going to allow you to filter through any markets, Forex, stocks, you name it. You could have your whole portfolio, Russell 3000, all the crosses, all the pairs, pick out all of them that have bearish engulfing patterns and or a hammer and are above a 200-day moving average and have the RSI below 20%. And it'll give you all the symbols for that. You could have a chart on the screen, highlight all the candlestick signals. It'll highlight all the candlestick signals. It'll also do real-time intraday. Pick out all the Forex markets, all the equity markets. I think it limits to 200 real-time that are currently building a hammer. So the reason I mention that is because I had to think in concrete terms, how much is too long an upper shadow? I never had to think about that before. Yes?
How
Okay, the question is how likely is it's a good signal? This brings us back to increasing the probabilities of a trade. Okay. If this hammer confirms a support area, the probability is higher. If, and we're going to look at this later, this is very common. I most often see the lower shadow of the hammer tested. It's rare to have the market sell off, have a hammer, and just rally without coming back into the lower shadow. So one strategy to think about is wait until it gets into the lower shadow, anywhere from the half part, and this is not 100%, but this is from my experience, anywhere from the half to the bottom of the lower shadow. And this is, see this bit of an upper shadow? That's fine. So I've found that the lower shadow is very often retested.
Yes, you also hammer sometimes 2 to 4 times the size of the body.
Mm-hmm.
The next candle will just go right down.
Okay, the question is, he said, how do you pronounce that? Suresh sees a hammer, and the next time it closes under it, right? Next day, it just keeps on going down. Great question, and this is one of the ways people misuse candles. Just because you buy on a hammer doesn't mean the next day the market's going to rally. We're going to look at a real-world example. We're going to look at an example of that. Whenever you initiate a trade, you can write it down now or later, but it's probably one of the most important things I'll be talking about later as far as money management is concerned. We always have to think about the risk-reward. Before you pull a trigger on a hammer, you set your stop-out level. What's the stop-out level? That's what this chart is about. The low of the hammer should be support. So you just defined your risk. Your profit potential is going to be subjective. Okay, I usually use the most recent high. So for example, on this hammer here, great hammer, I don't think I would do that trade. My first resistance area, yours might be different, but I'm looking at short-term resistance here, correct? If you're buying here and your target is here, now, very important, use the candle signals to define your risk. The low of the hammer should be support. One of the questions we had, and it gets back to Suresh's question, during the survey, specifically they say, hey, how come sometimes the hammer doesn't work?